Hello, everyone, and welcome to the InBizLv Podcast, the podcast for business people, entrepreneurs, and anyone who cares about business. I'm Mark Fiero, my co-host today, Fiero Communications Vice President Jeff Haney. So the new year is fast approaching. Quick question. What are you as a business person going to do to make 2020 the stellar year we all know it could be? Joining us today, Evan Dickson, President of Nevada State Development Corporation, which is involved in more SBA 504 loans than any other organization in Nevada. Tell us a little bit more about how to achieve the most growth you can get for your company. Thank you for joining us today, Evan.
Thank you, Mark. Jeff, good to see you.
Yep.
Likewise.
You can feel it. I mean, every business person can feel it. There's wind at our backs. Things are different. Things are getting better, it seems, by the week. And as weird as things may be on a national level, it sounds like Las Vegas is roaring again.
We're moving forward. We're going gangbusters right now, which is all good. So we want to keep it that way. Let's not slow down. Let's just keep the nice steady growth going and keep us all happy, right?
I like the sound of that. One of the things about Nevada State Development Corporation is that you guys are kind of a bellwether. We find out what you're doing. We find out what the rest of Southern Nevada business community is doing. We're seeing a lot of construction now, ground up construction that stalled out for years and years and years, right?
Yeah, we almost forgot how to do ground up construction there for a while during the recession and everything. I think we went through a period of probably 3 years where we didn't see a ground up. And now I would say probably, if you include major TIs on some of these buildings where people are coming in and totally revamping the buildings or totally taking it to the ground and even redoing it, I would say probably 50% of the deals we're doing involve ground up construction or substantial construction TIs to the property.
I would say the one thing that separates, and I'm not sure how many people out there understand this, but the one thing that separates your loans from any other loan process out there is that you're talking about the possibility of 10% down in some cases, right?
Yep, that's the basis behind the program is a 10% equity injection by the small business. And part of we're back, the program's backed by SBA, the SBA 504 program. So part of the thought process behind that is it allows small businesses to expand and grow and create jobs and create economic prosperity, all while maintaining part of their capital. They don't have to go in and lay down, 20, 30% equity injection to expand their businesses. We do a lot of capital equipment and a lot of real estate. We primarily do the real estate, but we've seen a lot of the capital equipment where these companies need more capital to grow or more equipment to grow, so they need to reinvest in their companies, which really kind of fits into where we are going into the next year, and looking at those opportunities.
You think about it for a second, we're kind of at a scissors point, a really, really good scissors point. One, it looks like a relatively safe time to jump in and buy real estate is safe. But at the same time, and things are growing right along, but at the same time, interest rates are ridiculously low. Tell us about what interest rates are last month.
I think we were funding last month at like 3.7 on a 20-year fixed. So we're at the lowest we've seen in a very, very long time. So it's a good time to take advantage of that. And the banks are the way the program works, we partner with the bank. So the bank takes first lien on the collateral for up to 50% of the value. And we come in and do an additional second lien on the value or on the collateral for up to an additional 40%. So the bank's rates are also at an all-time low. So right now you're looking pretty smart getting in there in that situation. Our appreciation within the markets come back. So some of the value of these buildings has gone up some, but that's kind of offset by the fact that you can lock into these long-term low interest rates and hopefully lock it down for 20 years. So,
and of course, you're statewide, not just Las Vegas. Let me ask you about the economic outlook in other areas: Reno, Elko, Northern Nevada, the rural areas of our state. What's it looking like out there?
It's looking good. We're doing a lot up in the rural areas, which it's good because we want to see these rural areas grow. And part of our charge through the SBA 504 program is to invest in the rural communities and everything. The interesting thing on that, Jeff, is we're seeing a lot of the manufacturing that's coming in from out of state move into some of these rural areas. You've got Reno going on up there with Tesla and everything.
Massive.
So that area, you're seeing a lot of these manufacturing come in and kind of set up in the rural areas around there, which is good. It helps those rural areas. Obviously, you need the employees to be able to service it, so it helps the whole thing grow.
I was listening to a podcast and they were talking about the Tesla plant, and they said the pressure for affordable housing is just through the roof. You think sooner or later somebody's going to knock on the door of NSDC and say, is there some way we can build a hotel or, low-cost homes or whatever the heck it is, and have it as a hold forever, because it's magic right now. I mean, they're talking about one-room apartments in Midtown Reno as a result of what's going on at Tesla, going to $1,500 a month. One room with a bathroom.
Yeah, that Reno market and the housing side is just, it's nuts right now with everything going on. I wish we could touch those apartments and all that. We really can't. We've done a lot of, we probably, I'm going to say this last year, we probably had 3 large hotel projects in like the outlying areas around Reno. So we are seeing some of that and being able to participate on some of that. And these aren't small projects. I mean, some of these are $15-20 million or close to $20 million projects that we're participating in. So
these are like hotels that may be a local site of a national chain, that kind of thing. Is
we usually like to see them flagged. Most of the lenders like to see them flagged with some sort of franchise on a national chain level. Gives you that little bit of comfort that they have that behind them.
Makes sense.
So,
yeah.
Now in Story County, so you've got this explosive growth within the industrial center there. Obviously, the big regional players are too big for you, but there is a lot of support that goes into stores, smaller warehousing. What is the upward limit that you can access, that people can access and still use NSDC?
We have participated in projects in excess of 20 million. Our portion is usually limited to about 5 million, between 5 and 5.5, depending on how it's structured. But we can go up to 5.5 million on our portion. But the bank doesn't have to just do 50%. So sometimes, I mean, on some of these larger projects, the bank will be at 10, 11 million dollars. We'll come in with our 5 million, and it gives the bank a sense of comfort because they're coming in at 50%, 65, 70 worst case, and then we pick up the remaining amount so that the owner doesn't have to come in with quite the capital outlay that they would otherwise. So.
This is a time of the year for great reflection. One, you got to figure out what it is that you're going to invest money in your business if you had a big year, so that you don't just, it goes out the door in taxes. But the second is planning for 2020. What are the kinds of things that we can do to get ready? And I know one of them is just online presence, just so that people know that you're out there, right? Otherwise, you do what you've done, you get what you got.
You know, it's interesting because we're a small business too. That's how we operate. We answer to a board of directors. So one of the things that shocks me is how many people don't set up a budget. How many businesses don't set up a budget to see what's going on and see how their business is going. What do you plan on doing next year? And I realize, in sales and production, you don't know exactly where it's going to end up, but you have to have the old adage, failing to plan is planning to fail. You have to have some sort of action plan there. I mean, you may adjust it down the road, but at least it gives you a focus on the direction you're going. And the other thing that I think a lot of businesses don't do that they really need to do is look at their resources at the beginning of the year when they're starting to plan on this and say, okay, this is what we have. Where do we need to make improvements? I mean, sit down with your senior staff and employees and say, where do we need to make improvements? What machinery, what equipment do we need to do? Back to your social presence. I mean, how's your website? Have you touched it in 10 years? Have you touched it in 15 years? Are you using it to its full capacity as far as having it out there in the social network? I think that's one of the things that a lot of businesses probably are not using it to its full capacity, which is unfortunate in this time and age.
Your NSDC is revamping the whole profile on.
See, we looked at it. We said, "Hey, we got to get on with this." So yeah, we're in the process of revamping our entire website to try and make it more user friendly and more user appropriate to the people that are going to that particular website, to give them the information they need, to give tools that allow them to better access their ability to use our program. So
Yeah, I'm always so struck by the extremely wide variety of small business owners that you deal with. I mean, it seems like there's kind of a lot of small law firms, maybe solo practitioners or smallish firms, same with insurance companies, but beyond those, it really runs the gamut. I mean, there's embroidery apparel companies, the horse stables, just about anything you could imagine. And all types of small business owners can come to you and maybe find something that works for them, correct?
that's true. I mean, that's part of the fun of the job.
Yeah.
We get to see so many different aspects of small businesses, and they all work. It's funny how they all have the same. The model is, they're going a different direction and they may have different ways of getting there and stuff, but the basic principles behind it are all the same. So when we're looking at it from the standpoint of planning for the future and all that, and looking at what they can do to improve their operations, I mean, they all pretty much can follow the same model, even though it'll be tweaked somewhat. I know that when we look at it, we'll look at our previous history, look at our financials based on this year, and this year, and take it month by month and say, okay, well, in June, historically, we've had these expenses. We know June is an expensive month, or in May, we know we seem to have high revenues. We know that this goes on. I mean, do you have large outlays that you have to pay during the year to do this? And that's in any business, because you have those cycles and everything. So that's why looking at the history can kind of help you into the future when you're looking at your years to come.
Yeah, I think if you look 2 years back and in 2019 went the exact same way, something's wrong. There's got to be some growth available. It's just a matter of going out and finding it. I know our business for a long time, the way we got business is the phone would ring and we would answer it.
Yeah.
and the problem is, it's a distraction. If you feel like you're being successful just from that, there's a whole lot of ways to ring the bell. It's amazing how important, and you've grown your presence there on LinkedIn and Facebook. How many casual viewers will all of a sudden say, I really hadn't thought about that. We could get off the treadmill of monthly rent and start building some equity. These are retirement plans in the form of a building, right?
Oh, without a doubt. It's a good exit strategy for any business owner to, if you own the building, by the time you're there for 20 years, you own the building. Even if your business is not able to be sold and basically you shut it down, you could be a landlord, you have an asset that's sitting there that's hopefully paid for at the end of that 20 years and can be liquidated, and, a good savings plan.
Excellent.
Or a source of income if you keep it and lease it out and be the landlord. So.
Yeah, and over the long haul, it's important to point out for people that have not been in Las Vegas all that long, we took a massive hit in this recession, but it's important to point out that's pretty much the only hit we've ever taken. Other than that, it was the same news every month. Las Vegas was the fastest growing community in the United States.
Historically, we've been the first in, first out.
Yep.
I mean, this was the last run where we were like close to the first in and the last out.
Yeah.
So, I mean, it was a little bit brutal, but historically we're the first in and first out. So we've kind of offset a lot of that. So, no, it's...
And then every couple of years since I think about the year 1950, there's been a dire warning that we're growing too fast and we can never maintain this rate of growth yet. Somehow here we are.
Yeah, it's funny. I have a friend I talk to occasionally, run into him and stuff, and we were talking, I think it was in 2009, we were like, we just got to get through 2009. We just got to get through 2009. And then it was like, we just got to get through 10. We just got to get through 10. But, when you're growing like this, I think we all would be happy with 3-4% steady growth.
Solid.
Yeah, solid. We don't need the huge jumps. And it's kind of, maybe that's what we're tapering off to right now. Maybe that's where we're at, is that steady growth period, which is good. I mean, that's not a bad thing.
Yeah, whenever you hear the word boom,
Yeah.
in the back of your mind you hear,
We get nervous now, don't we?
yeah, put a couple of years on you and you start watching out for those things. This process, the SBA process, for a long time, you would just see curtains go down over people's faces because, like, I don't have a year to be filling out forms. But this is a different SBA, isn't it? I mean, this is really pretty straightforward. You have a pretty good idea if you're going to qualify or not before you start investing anytime, right?
We do. And then we can usually, if it's not going to work right now, we can kind of say, here's what we need to do. Here's the avenue we need to go. I mean, I'm very fortunate that we have the people at both here and in Reno in our offices that can look at the situation and have done enough of lending and have been in this business long enough where they can say, okay, here's what we need to do to make this work, or this will work up to this amount. I mean, these numbers work. So yeah, we try to walk you through the process, make it as simple as possible, and at least get you to that end line. And I mean, we're willing to meet with you, with you and your accountant, with you and your lawyer, whoever you need.
A lot of times it's the broker too, right? That when that person is, sometimes you end up walking into a building without a real plan and you fall in love with something, and that broker can be the person that says, you might want to talk to folks over at NSDC.
We get quite a few referrals from brokers, primarily because of the service that we're willing to provide. I mean, we'll go out of our way to meet with the clients, like I said, and sit down with them and walk them through the process and try and get it done. A lot of deals come directly to us, and we work with every bank in town, so we know all the SBA players in town, and we'll say, where do you bank? And we'll know who to take that to at that particular bank to bypass, and get it in the right hands of the people that are going to make the SBA decision on the lending side.
I guess from the entrepreneur side, the one thing that separates all of it is if they start with you, they actually start with a human being. I mean, you'll end up with a loan officer, right off the bat. That's somebody that you can talk to and get their name and their cell number and be able to talk about what is this payment going to be? What if I go to this size building? What is that going to be? That's a big difference for an entrepreneur.
Oh yeah. I mean, we look at the small business. They're there to make money. They have their own job to do. This is our job. We're here to facilitate it and help you through the process as much as we can. We need some assistance in the process from the small business owner, but we don't want them to be totally focused on this when their job is to, if you're making the widgets, you need to make the widgets. That's what's going to pay the bills. That's what's going to get everything together. So typically we like to, hey, hook us up with your accountant, hook us up with your attorney. We'll deal directly with them, tell them to deal directly with us, and we'll work the process from there and try and get everything done, and then just come back to you, say, here's where we're at, here's what we're looking at. How's this look?
Give us a picture. What's this like compared to the real estate transaction that I guess most of us have been through, and that's just buying a home? What is it like in terms of pain and struggle to pull these numbers together?
Typically, when you buy a home, you need your tax returns. If you're self-employed, you're buying a home, typically you need your tax returns and the business tax returns. That's what we're looking for. There's some additional forms there that typically what we'll do is fill them out as much as we can for the borrower and then say, okay, here's the form. There's a few questions you need to answer and you need to sign it, and walk them through hand in hand. So we really try to simplify it to that category. I mean, it's a little more than that, obviously, because it is a real estate or a small business transaction. So we're basing the loan on the small business for the most part, and the financials of that small business and its owners. So it's a little more in depth than buying a house, but we try to make it as simple as that.
Gotcha.
And we touched upon the upper limits of some of the big deals you do. You mentioned some of them stretch into the 8 figures, $10 million plus. What about the other end of the spectrum? What are some of the about the lowest dollar values you'd get involved with for a much smaller business.
We on our side of it, we've done $25,000 debentures, which means our loan has been as low as $25,000. I mean, we've participated in properties when the recession was here. We did some properties that were $100,000 or less. So yeah, I mean, we're here to help the small businesses. We want to see economic development, job creation, and growth within our area of operations, which is the entire state of Nevada. So yeah, we want to play.
Yeah, and if you're on that small end, who says you can't inject that equity and grow and become, if not one of the big boys, at least reach your fullest potential?
Oh yeah, I'm sure the ones we did we did a few of them one year for $100,000 was a project. So I'm sure those business owners are pretty happy right now, because that was during the recession when everything was, values were down, and they were buying these properties for $100,000. They get in for $10,000 on an equity injection.
Right.
And so, and I'm sure those properties are probably worth $250,000 plus right now.
Oh, absolutely.
So
absolutely.
they've done pretty good, but I could have sold my house before the recession too, which would have been good.
Just getting back to those points now, though. Things are looking pretty good. What's happening with individual inventories? What's happening with medical? Is there inventory out there, or you have to build if you're going to do something?
I think there's some office inventory out there. It depends on what you're looking at doing. We've done an awful lot of surgical centers. We've seen a lot of them, I think, which is on the medical side. I guess we're seeing a lot of the doctors and professionals in that area that do these surgicals or surgeries start opening their own surgical centers so that they can have more control over it instead of paying other surgical centers to go in there and do the surgery. So I think we have done, between here and Reno, I would say we did probably 4 in the last 2 years. And most of those are ground up. Most of those are at least gray shell, where they go in and do major TIs. The industrial is tight, depending on where you want to be and what you want to do. A lot of that inventory's been eaten up. So,
and a lot of gray shells are still being built right now, right?
There is.
Across the spectrum.
Yeah, we're seeing more and more of the gray shells where they're just selling the gray shell and letting the owners come in and do their own TIs. And so we will finance the gray shell in the program. Well, us in the bank will do the gray shell purchase, and then we'll also include those TIs as long as it fits within the appraisal. So that's
and then, so
very
what
common.
do they end up in a building loan until it's finished and they've got a certificate of occupancy, or how does that work?
It ends up as a construction loan. Yeah.
So interest only.
So initially it's a purchase of the gray shell, and then when the permits and everything are done, usually the bank will handle the construction draws, or they'll have it sent out to a construction draw company. And then once that's all done and everything's funded, you have the certificate of occupancy and everything. That's when we come in and we take out the bank's interim loan, and you end up with your 2 loans.
With these kind of dollar figures that you're talking about, that covers a sizable piece of property when you're talking about warehousing. There's a lot of warehousing that's going up, and a lot of it looks like it would fit within that category, wouldn't it?
Oh yeah, we've done quite a bit of the pretty big shell properties. So, and we're seeing more of the manufacturing, where part of it's a warehouse, part of it's office. So a lot of that.
Yeah, a lot of flex.
Yeah, a lot of the flex properties.
Flex. How do they get a hold of you? How do the entrepreneurs out there go, I've had this business for 10 years. I got a stack of rent checks. This sounds good. What do you do?
Check out our new website.
There you go.
NSDC.com. Or I can be reached at 702-473-6202.
And a robust presence on Facebook. They want to follow you there, and they can also get with you on LinkedIn, right?
That would be great.
There you are. Thank you so much.
Thank you guys. Appreciate it.
Absolutely. And with that, we call it a day. I want to sincerely thank our special guest, Dickson, President of Nevada State Development Corporation, Jeff Haney, Vice President of Fiero Communications, and for all of you out there who own businesses, have that entrepreneurial spirit in your heart, or care about someone who does, remember to like and share InBizLv Podcast on Facebook, YouTube, and Stitcher. If you know of an interesting business with a story to tell, you can reach Fiero Communications at 702-385-7300. Make it a great day. See you out there in the deal stream. We are out of here.